So basically, Nifty 12-month PE ratio is currently situated somewhere around 21.8 times. However, Nifty mid-cap PE ratio stands at 31 times and Nifty small-cap ratio stands at 23.5 times. The kind of returns these companies are giving just because of investor enthusiasm.
So, before we start, could you tell me your name?
My name is Gandharv Anand.
And what do you do, Gandharv?
So basically, right now I am a broker with Motilal Oswal. Before this, I was working as a forex analyst with Finrex Treasury Advisors in Mumbai. So we basically used to concern with booking futures and forwards for all of the exporters and importers in and around India. So I was managing somewhere around 3,500 crores of investments. And then I basically quit my job. I wanted to start something of my own in the financial markets. So then I came back to my hometown in Delhi and I started working as a broker under Motilal Oswal. Before my job with Finrex, I was also working as a research analyst with Prabhudas Lilladher in the auto sector.
Right.
Yes, that is my candidature.
Which is lovely, by the way.
Thank you, thank you.
So, I'm really glad that you agreed to interview with us.
Mhm.
And like we spoke earlier as well, the first question for you is why is Nifty performing the way it is?
So basically, Nifty is performing the way as it is because clearly BJP has won in the elections this month that was scheduled in the past three states. So there is enormous amount of enjoyments and celebrations in and around people. And, basically the thing is people are expecting a policy continuation. The word over here is policy continuation. So whenever there is a hope for a better policy continuation that the government will say that we do not need to implement in and around changes, people celebrate and they start up buying the stocks. And anyways, this is before the January effect. We have always seen that the market keeps on going up, and sometimes around the mid of December, I think we shall start booking some profits over here. There are few reasons why. Because in the January effect, mostly FIs become net sellers. They take home their profits and they exit from the markets. Second of all, markets at current have a lot of froth. If I talk about small caps and mid caps, they have given you immense performance, immense returns as compared to even Nifty. I mean, the large cap have actually not performed that much. If you look at portfolios of Mr. Saurabh Mukherjee, he has seen a lot of investments being withdrawn because his portfolio is only concerned with large caps, and large caps were a lagger this time. The only return that the market has given is in the small cap and the mid cap segment. So if I were to give you some statistics based upon 12-month PE ratio, so basically Nifty 12-month PE ratio is currently situated somewhere around 21.8 times. However, Nifty mid-cap PE ratio stands at 31 times and Nifty small-cap ratio stands at 23.5 times. So basically, if you can see, Nifty mid-cap and Nifty small-cap have given you much better returns, which is obviously unjustifiable, the kind of returns these companies are giving just because of investor enthusiasm. That is it.
So,
So
can it change? Is there, sorry, did I cut you off?
no, no, no. Yeah.
No? Okay. So, the next question is there any caution that people need to exercise, or is there something that can, be a hurdle in the enthusiasm that we currently see in the markets?
So if I were to give you some technical aspects of the same, if you look at the historic charts of Nifty 50, whenever Nifty has, come near to the mean average PE ratio nearby 22 to 23, markets have always gone for a toss. All right. So Nifty basically has gone way far from the mean, which is somewhere around 15 to 18. And if I were to give you on the technical aspect, I believe according to Fibonacci levels, 21,078 is my level where we shall actually book profits and take exits in the markets. Short-term buy markets will be a buy on dip. There will be no major correction. However, the buy on dips level can be found at 20,400. So basically 21,078 is the level where we should book profits, and 20,400 is the level wherein retailers should once again enter. And to be honest, I will not suggest retailers to enter into small caps and mid caps just because they have a lot of froth. We will have to be very, very specific on the kinds of investments that we are choosing now. Large caps seem very attractive to me, especially because they have underperformed in this rally. Uh, I think large caps will be the next best, alternative as of now in this market. A better and a safe haven.
Are there any current trends that, people
Yeah.
should be on a lookout for?
Yeah. So, talking about trends, I believe the power and the energy sector can go for a turnaround story this time. As you can see, Tata Power has given you immense performance of more than 35% returns in the past 2 weeks. And if I talk about JSW Energy, which was again up 5% and a fresh all-time high breakout today. So I believe few stocks in the power sector, power and energy sector, can give you, a quick upside, be it Tata Power, JSW Energy, Inox Green, so on and so forth. If I were to give you an opinion, I believe the reality and infrastructure sector can again go for quick gains. Why? Because first, talking technically, we have seen a breakout after 15 long years. In the reality sector, we have seen a breakout after 15 long years, be it stocks such as DLF, Prestige Estates, Oberoi Realty, Godrej Properties. So I believe the momentum is not going to stop. It will be a complete buy on dip strategy for the reality sector. Second reason why I'm betting on this structure is that I am hoping for a rate cut by the Fed sometimes in the months of March. I'm expecting a first rate cut in the month of March, and I believe whenever there is a rate cut, the reality and the infrastructure sector goes for a big jump. So, reality sector, power and infrastructure. Then, yeah, fertilizer stocks, just a small rally. Why? Because the ammonia prices have dropped in Russia. So, that is why the fertilizer sector can experience a small rally. Yeah, then also, I think Nifty Bank. PSU banks and private banks, we can expect good gains over here, and we can bet upon these banks, be it Central Bank of India, be it Indian Overseas Bank, be it State Bank of India. Yeah, then we can see, banks such as ICICI and Axis Bank. So I believe that the price to book ratio for Bank Nifty is currently cheaper as compared to the PE ratio. So I believe there is, some more gains that can be made in the Bank Nifty segment. However, I play safer side. I just go for Nippon India Bank Bees. That is an ETF. I accumulate that on every dips, and I keep on having an SIP on that.
Any sectors, people should just be wary of or steer clear of. Either way, I'm good.
Steer clear of, I believe. Uh, I don't think so that any sector is having, a negative trend as of now. Nifty IT is something. I think we should give some allocation to Nifty IT, but the allocation shall remain relatively small. In our entire portfolio, we shall obviously give a weightage to Nifty IT large caps such as Infosys, LTTS, and Emphasis. But the allocation shall be relatively small, somewhere around 5 to 7% of the portfolio as of now. Because if you see large cap IT such as Wipro, it has been giving out poor results from the past 4 quarters, and we do not know that what will the result be in the next quarter. So I believe it is time to be a bit cautious, not too much cautious, but a bit cautious in the IT sector. Obviously, there will be small rallies, like we experienced a rally in LTTS yesterday, but the overall allocation should remain small.
Small.
Yeah.
Okay. Just moving a little off the topic.
Mhm.
Could you also speak about gold?
Gold, yeah.
Yeah.
So basically, as we can see, gold has given, an immense outperformance of the entire asset class. So basically, there are a few reasons around it. Basically, central banks have been buying golds in tons and tons of quantities every year. This year, India alone had bought somewhere around 76 tons of worth of gold, if I am not wrong. Yeah, so basically, I believe gold, anyways, is considered to be as a safe haven. And, since during the Russia-Ukraine war, US ended up, debarring all of the foreign assets of Russia. So everyone started flocking to gold because which is the next best haven if USD is not the haven. So that is why I believe there is so much enthusiasm around gold. I believe when the dollar index will once again start rising up, I think that shall be a time when gold shall give you a pause.
All right. All right. It was great speaking to you.